What's up everyone, it's Caddy with Money Investing. In this video, I wanted to give you a little bit of an update on where we are with this market right now because I saw a couple of headlines on both MarketWatch and CNBC and I figured I'd go over some reasons as to why the market is struggling right now. Why have we really approached some type of a pit stop in the markets among this rally since October, since January of this year that we have seen, why the markets are really stalling sideways. So hope you guys enjoy this video and find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. Everything is going to be included. There is a 16% annual discount available till the end of this month. So there's only about 7 days left if you want to take advantage of that discount as well. So this right here was the first headline that I saw on MarketWatch, why the stock market is so frustrating right now. This right here was another one. Is it a bull market or a bear market? Stocks churning in the same spot for weeks frustrates investors. Now, we've already talked about this on the channel. I've literally been beating a dead horse, I feel like, because we've been talking about how the markets are at a very critical area of resistance, right? We agree. I think we're all on the same page when we talk about the market technicals and how we have approached some type of a resistance, which is also labeled on my charts, which, by the way, everyone has access to my technical analysis charts on TradingView. So if you're a part of our Discord and our Patreon, you can access all my charts and they update automatically. But I've pretty much mentioned a bear camp for the S&P 500 and the NASDAQ as well. This right here was a very interesting paragraph which pretty much mentioned that stocks have been churning in a narrow channel on low volume for weeks. The S&P 500 about flat on Friday, flat for the week, and barely changed this month. So April has literally been all sideways for the market. With only a single 1% daily move in April, the index is almost exactly midway between last year's all-time high and the bear market low, and not to mention right at the same level from 2 years ago. So we are literally right in the middle from our all-time high, in the middle from our bear market low, and not to mention at the same level from 2 years ago as well. Yet, rather than finding comfortable in the gentle action anchored to familiar price levels, investors are generally frustrated or confused by it. Trust me, we're not. We're very sharp with this analysis because we are trading sideways. We know exactly why. I'm going to go over some of the reasons. And those who grew bullish based on the promising momentum signal off of October lows in January had their conviction sapped by the S&P 500 halting at exactly the spot the chart suggested it would, 4,200, with the market breadth faltering along the way. Something that I have been literally talking about on the channel, market breadth. And I feel like a lot of articles are now starting to cover that again because the market breadth was narrow. We talked about it on the channel, I think weeks ago, where this market rally was concentrated, very much concentrated on a handful of stocks and not really seeing that broad-based rally. We're not really seeing a lot of stocks push higher at the same time. It's just a handful of names. We've got Nvidia, we've got Microsoft, we've got Tesla, Apple. Those are the ones. We all know which ones those are, right? They're the ones that are pushing the markets higher. And this is where we are. This is the bear camp that I've highlighted between 41 and 4,200. That's the 100-point range within which the S&P 500 really is just consolidating sideways this entire month. Of course, we've seen a very nice rally from 37.74. I believe this is the weekly chart. So yes, we've seen a very nice rally. But in April, all we have really done is gone sideways. So S&P 500 pretty much traded in that range, 41 to 4,200. Not to mention this right here is the overall range within which the S&P 500 has also been trading at, between 3,500 and 4,200. This right here is going to be the NASDAQ, right? A very similar situation. You can see the last 3 candles, and we have literally just made doji candles consolidating sideways. So this rally has really started to stall as soon as we approach this bear camp, which again, I pointed out in my videos time and time again, and that's going to be 12,300 level for the NASDAQ. Now, there's a few different reasons. I want to come back to these. I want to circle back to these. And this right here are some of the reasons for this potential pit stop, which I consider to be a pit stop because we're definitely stalling at these levels for the S&P and for the NASDAQ, right? Number one reason, we've seen a concentrated rally, right? 40 largest companies in the S&P 500 gained over $2 trillion in market cap since the beginning of this year. And the remainder of 460 companies, which is 96% of the S&P 500, only gained 17 billion. Or actually, this is 170 billion. I gotta correct that. That's 170 billion in market cap, not 17 billion, 170 billion. But you can see that stark contrast between the largest companies gaining $2 trillion and the remaining 460 companies, or 96%, only gaining $170 billion, right? So this is not a broad-based rally. This was a very much a concentrated rally for the S&P. Now, another thing I talked about is the percentage of S&P 500 stocks that are trading above their 20-day moving average was at over 80+%, which was the previous screenshot that I wanted to go over, which was over here. You'll notice that every time we get to over 80%, 90%, and this number has a cap, right? I mean, it can only get up to as much as 100%. And I don't think ever it's gotten up to 100% to a point where all stocks in the S&P 500 were trading above their 20-day moving average. The highest I think we've seen is get up to 98.5%, 99% at the most, but that's about it. So we were trading as high as 80%. And again, you go back and look for signals every time this indicator is inside this red rectangle at over 80%. The markets do see a short-term pullback, right? You can see the pullback here, you can see the pullback here, pullback here, pullback here, pullback here. I mean, the list goes on, and that's literally in front of you. This is data-driven analysis backed by actual charts. I'm not making anything up here. So this number was also at over 80%. It has thereby pulled back a little bit down to under 68% now. So we still do have 32% of the market trading below their 20-day moving average, but we are at, again, critical area of resistance for this chart as well. Volatility trading at under 17. It's trading at a 1.5-year low, so extremely low VIX, right? And we have also seen very, very low volume as well for the market. So continuing on my list, and the reasons for this pit stop is VIX is at a 1.5-year low, 16.75. Overbought conditions, right? So when you combine this concentrated rally with the fact that the stocks that are actually moving this S&P 500 higher, or actually are making the markets go higher, are now starting to become a little bit on the overbought side, of course, the market's going to struggle to make new highs, right? If you think about overbought conditions for Apple, Nvidia, Amazon, Meta, Google, Tesla, all these companies, right? Especially Nvidia, Microsoft, I haven't mentioned here, but Tesla and Microsoft should also be on this list. They've all gone up like 30, 40, 50%, 70% on a year-to-date basis, not to mention Nvidia, 150% on a year-to-date basis. So at some point, you're going to find these stocks hitting a wall, right? You can't have buyers stepping in every single week, every single month. I mean, where's the liquidity going to come from, right? They're going to start to lose steam. And when that happens, if these companies start pulling back, that's why you're seeing the markets consolidate sideways. That's why you're seeing a lot of kangaroo type of action from the markets where we're not really going higher anymore. We're also seeing low volume. So what that means is, although we're not seeing a lot of buyers, right, in the markets because nobody's interested in kind of buying into resistance or overbought conditions, at the same time, we're not really seeing a lot of sellers either, right? We're not seeing people take or pretty much sell into the rally that we're seeing, although there has been some reports that institutional investors have been a lot more interested in selling into these rallies. In fact, I showed you guys another video, in my separate, episode. We talked about how institutionals are selling into this rally and retail is the one actually buying into this rally. So there is a little bit of discrepancy between smart and dumb money here. But either way, we are seeing low volume and liquidity. Yields are back up on the move. So 10-year yields are back over 3.5%. In fact, the bond markets are pushing higher. So we are seeing the bond market once again get back over to 3.5%. That's, again, a very, very substantial move for the bond market in itself. Technical resistance for the S&P 500. So that's another big reason as we are once again approaching a very critical area of resistance. The bear camp, something that we have talked about in our videos as well. That's another reason why the markets are struggling. And these are all technical reasons. Now, this is more related to macros and the economy. There's a lot of uncertainty still with the Fed interest rates, the company earnings. So earnings season's just started. So how companies report their earnings, inflation and expectations, and of course, not to mention the economy and the unemployment as well. There's still a lot of uncertainty with those things. And as a result, the markets are really at a pit stop and not really able to break past certain levels. Now, this right here was another really interesting take, which pretty much mentions that bears are hibernating right now, but they'll wake up hungry if the S&P 500 can't break 4,200 soon. And that is true because right now there's a lot of low volume, right? So if buyers don't step in soon enough and we get a break past 4,200, it's possible that we start to see a move back lower and a little bit of a retreat back down to next support levels, which for the S&P 500 is going to be sitting roughly at around 37.75. There might be some support at 4,000, some psychological support sitting there, but a much proper support and a lot of demand is going to be sitting at 37.74 for the market. So really, it's all about the bear cam that we're sitting at, and all the other reasons that I pointed out from a technical and from a more macroeconomic standpoint is the reason why the markets are mostly trading sideways. And if I go over also my chart on the QQQs, this right here is all of April, right? And I've already got, trade alerts set up for all the members, for everybody who want to take advantage of it, because you can trade this market. You can absolutely trade this market because of the fact that it's trading sideways and you're seeing a lot of consolidation, a lot of volatility in that range. This is a tradable market, right? So the environment that we're really in is a kangaroo market. So if you go back, and these are some of the things that I'm personally doing. So market, it's not a bull market, it's not a bear market, it's a kangaroo type market where you're really seeing a lot of sideways consolidation. And the environment that we're really in is a tradable, right? Don't think that you can't make money in this market because of just sideways action, but instead you can, and there is going to be a lot of tradable opportunities. When there is a sell-off, right, I'm personally looking forward to buying or dollar cost averaging. And if you do see a rally, I'm personally looking forward to trimming and selling and exiting some of the positions to raise my cash exposure a little bit more. So that's really what the playbook looks like right now, considering what we're seeing is a lot of consolidation and sideways action for the market. So hope you guys enjoyed this video and a complete update on the markets here. Let me know your thoughts down in the comment section below. As always, if you enjoyed it, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the binds alerts, options alerts, trade ideas, everything's going to be included. And that 16% annual discount also available until the end of this month. As always, happy investing. I'll see you all in the next video.